What's good, y'all? My bad, my computer died. So I'm starting a little late, but nevertheless, I don't think I can turn my camera on. Unless I use this. I use this. I don't know if that works both ways. That's weird because it do. All right, cool. Um, all right, well, that works. We'll get right into it. Yeah, my fucking computer died. It's just literally wiped out all my tabs and everything that I had together, so that sucks. But it's all good. Gonna run it back, get this shit started. So this is just gonna be supposed to be a group markup session, but it's recorded. So if you didn't make it, it's cool. Just wanted to allocate some time to the Discord, and actually, do some group mockups. But it's all good if you can't make it. You still can watch the video. Still be something in here. I think that you will find worth it. So first thing I want to do is go look back at some of the pairs that I looked at last week, right? So I did a video about my expectations of some of the other moves, some of the other pairs I looked at on Tuesday, I believe it was. But I don't know if you guys remember, this was NZD USD on the daily. You can always go back and watch that video as well if you don't remember exactly. But this was on the daily chart. And what I had implicated was that we had this really high low here. Was this the high or was it over here? No, you're making me think I got to go back and watch. I know, let's think it's like November or September. September. It was 2023 too. See, now I got to go back and watch. But regardless, what I do remember though is that I was expecting for one of these levels to provide us some type of liquidity and then bounce back to the upside. As of yet, we did not get that. We got a continuation down to the downside. Take out these levels. It's taking out this level, but it's still kind of premature, right? It hasn't made a good amount of distance for it to me at least, be considered that hey, it's gone, because you still have this low over here, right? And with this low is an order block. You have this big move up, and then with the run down. So depending on how it takes this low, if it trades back in, makes a sharp turn. But it's something we want to look at, as well as any other lows been taken in this area, because this is a sensitive area, right? So that's NZD USD. We also looked at gold. Gold being pretty obvious, honestly. Pretty classic, I like to say. So it depends though. It really does depend on how things go. Gold is one of those that is very sensitive to different price changes. So for example, my idea was gold to drop down, take out these lows, get the liquidity that it needs, and to go back off to the upside. But it's also important to understand that gold took this low here, right? Implicating that it has a strong bearish movement, but you also have to understand um, the overall picture for these things, right? So if you look at it on the weekly, we see that okay, yeah, it took this low here, but if it's the same type of low like these on the daily, this low on the weekly is just a weak low, but on the daily, it looks a lot more powerful than what it actually is, right? And you can see it's just the wick that you see on the weekly right here. I'll show you that it's the same low. So this wick that you see here is the same thing. You know what? That didn't help at all. Change the color. So when you look at it on the daily, you can see that this low, this wick, is just a sharp turn, right? These are just little small, just sharp turn wicks. Same thing with this, right? If you look at this on the weekly or even the monthly, right? These are just long wick, nothing candles. So it's also important, it's also important, it's always important to remember the higher time frame or the time frame above you. There is a process that you can use for this. So if you're like a swing trader, people recommend using the higher time frame as the monthly, and then using the daily as like an entry time frame where you actually start getting in the trades. And then I didn't even realize I'm sorry, OBS, if y'all look weird or no, look decent. Okay. But yeah, so if you do swing trader monthly, the daily, etc. You could do 4 hour, 15 minute, 1 hour, 5 minute. That's how I trade. I like to do 1 hour, 5 minute, and then you could even do 15 minute. Pretty sure it's like 3 minute or 1 minute. But regardless of how you trade, all these things are fractals, just depending on how you want to go upon finding what you're looking for. What is your style of trading? I like to do quick trading, in and out, big moves, make money fast. So, Jen, actually, can you be quiet, please? So, that's how I like to go about doing it. There's different ways to do it, different ways to skin the cat, as they say. But cool. So that's my plan with gold. Gold to come down here, take these lows. All right, that's what I was envisioning in the beginning anyway. Was gold to come up, take these, and then work its way down, and then hopefully go back up. Um, we'll see, right? So what we like to see to confirm that theory or to confirm that idea is to see order blocks, bearish order blocks being created for us, right? So when we see these runs down and then price closing above them, which that one didn't, when price closes above them, coming back down, retesting, and then taking off, right? So if you pay attention to this one specifically, you do have a bearish order block. You do have a bullish order block. I'm sorry. So you have this strong move down here that made this low, and then a run up above it. You have price trade back to the 50% range, give you a little consolidation indicating that the market is turning, it's trying to do something. Sweep of these lows on the inside, and then takes off, comes back down. I think it's just going to give us one more little retest down into this fair value gap, and then boom. So that's how I interpret the markets. That's just how I go about doing it. It's different for everyone. Everyone looks at it differently. Somebody could be looking at that for sale, right? And that could still be right and make money. But I like to look at the overall trend and try to ride that trend that way. Even if I get in too early and I miss some drawdown, I know the overall trend of the market is bullish, so it'll turn back around. US 30. I don't remember exactly our talk about US 30. I do see, obviously, though, US 30 is in a consolidation. When you see consolidations, it's just best to trade the range. So, for example, you can pick any of them, but I just like to find clear ones sometimes. Not trying to cherry pick anything, but like I said, just to find clear ones. So you have this range here. Before that, you have this range here. Price trades in a range. It takes one side of the range, comes back, takes another. This here, once you see the order block get respected, that creates a new range. There's low, and then boom, takes off. That's your range. So now this is your new range. So now you have price bouncing back. This is the top of the range, I'm sorry. And then once it comes down, it makes this low. Price takes one side of the range, bounces around, wants to take another side of the range, comes back up, creates this new range, takes out that range, comes back down, takes out that range, comes up. You would expect it to go and take out this range, but it's not always 100%, right? So then it creates another range. Boom, this high to this low, price takes out this range, and now it looks like it wants to go take out this range, and then probably this range too. So that's all I do for ranges. I don't remember exactly what we spoke about for US 30. I don't really trade US 30, but it's just one I wanted to show you guys for a friend. So we did US 30. I know we looked at AUD USD a little bit, and that's only because I just like to see it diverge. That's something I'll explain to you guys a little bit later. It's actually really helpful. It's probably something I should teach sooner than later because it's a confirmation tool to help you just have more faith and confidence that the trade that you're in or the direction that you're looking for is actually going to go that direction. It's an awesome tool, actually. Like, it's one of those things that's part of my trading plan. Like I said, I have rules and a plan. If I don't see SMT, that's what it's called, or divergence, then I don't take the trade. Right. So fuck it, I'll just show you guys really quick, a quick divergence. Well, it's gonna be a little weird just because I don't have the fucking premium plan on this account. Yeah, I don't. So all good. I'll show you really quick still. This is AUD. But essentially what it is that you'll see two pairs that usually trade just about the same, right? So, they trade the same way, the same direction, like NASDAQ and, the E-mini. Look at those two charts, you'll see that they both pretty much trade alike. But what happens is that sometimes you get a crack in the correlation where one will be going up, but the other will be going down. And so what this is indicating to us is that whatever we have pretty much the conclusion that we've came to as far as direction. All that's doing is confirming our idea. So if we have divergence at the highs, that means we can expect to sell. And if we have divergence at the lows, we can expect price to go higher and we should buy. So for example, I'll show you really fast. So we just had this long run down. Usually the easiest way to spot the divergence is just to see where the long big overall distribution move started from. So it started from up here, right? So if you look at this is NZD USD. Different pairs correlate with different pairs, and eventually I'll give you guys the list because I still have to find the list myself. I have it, I just have to find out where it's at in my notes, but it shows you all the different pairs that correlate. And some pairs they correlate inversely, if that makes sense. So instead of them one's trading, they're both trading up in the same direction. One's actually trading, you know, down, right? So one might be trading up, another. It just looks stupid. That wasn't a good example at all. But they just it's inverse, right? So when one's going down, one's going up, and then when you see them both doing the same thing, then that can be an indicator that something obviously isn't right. So I'll just show you to help you get a better understanding of it. So for example, NZD and AUD/USD correlate. GBP, EURUSD correlate. NASDAQ, ES, and the Dow Jones correlate. So you can have those charts pulled up and look for the correlation. So as you can see, this is what we're looking for. If we're looking, if AUD is supposed to correlate with NZD USD, it should look similar. And if we look at it, what do we have? Right? It looks similar, right? But then you'll begin to notice that we have divergences. And these divergences are some of the biggest indicators that will help us catch huge moves, especially if you can find these divergences on the higher time frames. So on the lower time frame, sure, it does work, but it's not as backed by the higher time frame, right? It doesn't have that solid emphasis because it's only on a smaller time frame, right? It's on a smaller time base. The things that are made on these daily 4 hour and 1 hours happen over days, 4 hours, multiple 4 hours, and multiple hours. So those are things that hold more precedence to us. So nevertheless, let me just show you an example of a divergence. So let's see if I can spot one ASAP. Nope, not a good one. Boom. Boom. Okay, here we go. So this is a divergence right here. So from this high to this low, not even high to a low, it's just from this high to this high. It's called SMT divergence, right? So this, and I'll give you a better understanding of this. So this is I don't use all the tools on TradingView, so sometimes I gotta go and actually look for them. But they got some little tools on here that I can use just to call out. Okay, yeah, we'll use this. So on Friday, is that Friday? Yeah, we'll use Friday. Friday the 14th, 2023, and we have Monday, 30th, 2024. Okay, so you have divergence right there. From Friday, 14th, 2023, 30th of Monday, whenever month, September to, I'm stupid, I put Friday 14th. I don't know why I just didn't put the month in there. It's July. Okay, it doesn't even matter. Alright, well, yeah, I guess it kind of does, so you can just, it's easier to understand. Let's do it right. So, July, yeah, July 14th, and then this is October, month of October. Yeah, just do it right. I don't like cutting corners. All right, so from July to October, you have that divergence, and then if you, this is NZD USD, mind you, and then if you go look at AUD USD, from the same time, on those same periods, July 14th, 2023, July 14th, 2023, April, June, July, cool, July 14th, 2023. So even though this is the 14th, as you can see right here, actually right here, you want to still just use the high, right? Because that's it is right next when it's right there. This is the obvious high. Sometimes it'll be the exact high, sometimes it won't. But if it's just like a day off or something like that, that's the high. Use the nearest high. So from there to what did I say? October 30th. So from here to October 30th, 2024, August, September, October 30th. Yeah. So it'll be somewhere over here. So what do you have? From here to over here, if we did it this exact way from the high to the low, from October 30th, then boom, it would be something like that. And that just looks fucking stupid. Obviously, what we're looking for is here. This is where the divergence happened. So it wasn't, is that September? Yeah, it was September. Okay. So yeah, September 30th anyway. I'm stupid ass. So yeah. So yeah, if you go right to September 30th, I just wasted so much time doing that. Okay, so if you go to September 30th from July to September, what do you have? You have a high and then a higher high. But then on NZD USD, you have a high and then a lower high. That's money. That indicates it's time to sell. When you see that, it's time to sell. Like, boom, look at that. And this is just the daily. Imagine you wanted to scalp this. You could have scalped this from October 1st all the way down up until now, which is fucking, what is today? December 15th. And like I said, I trade off the 5 minutes. So just imagine how many opportunities. Like, if you go to the top of that, look at that. Let's see if we can find it. I might have went too low with the 5 minute. But yeah, just look at all these opportunities to get in. And what do you see? You see a high being swept, and then the low, like I told you guys. And then in the last video, if you got a chance to watch it, you have the order block being made. So the up move and then the down move price trades back into the order block. As you can also see here, you have the up move, price trades down, and what this candle here, as well as some of the other ones, it trades and touches the order block and goes back down. Now, the reason that it didn't give you this full 50% that I speak of is because you have to understand that price is ready to take off, right? So this took a level. This up here was a lot of liquidity. That's why price, all this needed was to just take this and then it was going down. It didn't need to come all the way back up and, do anything else. This is what it needed here. So when price took that high, it shot down. And all you see is order blocks being made and respected. Order blocks being made and respected. Highs being took, just as well as if you wanted to buy, what do you want to see? Lows being took. So you see order block comes out, you get this fake little move here, like, oh, trading up to the order block, let me get in, and then boom, takes you out, lose money. It's fucking everybody on both sides if you don't know what to do. So even if you are trading short, you still can get fucked if you don't know what you're looking for. Price comes down, takes this high, makes this high, I'm sorry, and it comes up, takes it, trades into the order block, and takes off. Right, so that's why one of my rules in my trading plan is always just look for a high or a low being swept. Which high or low being swept depends on the context of the market, but that's essentially how I trade. But yeah, that's a huge, 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 huge piece of sauce. Is look for divergences. Like I said, I'm gonna go through. If anybody wants it, I will send it to you. But I'll find the list of the different pairs. So if you trade like gold, you'll see what correlates with gold. If you trade oil, correlates with oil. Euro USD, NZD USD, whatever forex pair you can think of. It works for everything. So that's just a little piece of sauce, a huge piece of sauce actually, a huge piece of sauce. But yeah. So let me just get straight into the markup for the week. Now I think this week I'm pretty much gonna hang off of NZD USD. I actually enjoy it quite a bit, but I feel like I've been trading it a lot, and the fact that it's the New Zealand pair, it's safe, it's relatively safe. Like the direction has been easy to determine for the longest. But now it's starting to consolidate a little bit, and usually sometime around I'm gonna say this time the seasonality you start to begin seeing an uptrend, which I haven't seen yet, so that's also a little scary. And it's just starting to consolidate now. So it's not really any real or sustainable moves if you're in the middle of consolidation. But if you can catch it, like around times like this, right? Like if we can get a nice reaction off this would be great. That'll be a nice big move because this is on the daily consolidation. But we'll see. It might want to just continue to trade down here. So this week I'm going to focus on EURUSD. And just do a quick mock-up. I'll just delete everything on here that I have. Show you guys how I do this shit from straight scratch. EURUSD honestly isn't too much better if I'm being honest, but we can start to see how price actually wants to move, how it wants to work. All right. So first thing that I do, and this is optional, but it's something I like to do, is just look at the weekly. How's the weekly trading? Each of these candles represent a week. So I just like to just kind of get a general overview of direction because it's easy to understand the direction, right? So if you were trading these weeks, if you drop down to the daily and anything lower, it's just obviously bearish, right? Just easy sales. So I like to look at the week and see if am I in a continuation of the trend that's already establishing, or am I in a position where it's about to turn? And that's usually the only things that ever happen anyway, right? It's either continuing, it's retracing, or it's starting to turn. So price takes this low, it's trading back in the range. So we'll see, right? We don't want to jump in too early, and because I've multiple times it's happened to me where I actually try to like get in when I seen the low being taken and swept back in, and price kept going lower. So you just want to wait. Sometimes it's even better to drop down to a lower time frame so you can see more precisely what's happening. So just observing those lows, we can actually take a note of it by marking it out, right? This is a markup session after all. So I'll mark that out, that low being taken. I like to look for anything below the low as well, like any fair value gaps or anything. You got like little stuff because for some reason it traded here and turned around. So I like to look for this area too, what it may have been. All I can obviously see first off is just the order block. Price boom, higher, boom, higher. Wouldn't have used this one with someone like this, the fair value gap out of it. Nope, no fair value gap. Maybe if you drop down lower. But regardless, it's irrelevant. That's what we're looking for. Price comes down, takes that low, and then now we're on the daily chart. Now this is where things begin to get fun. What you want to look for is obviously if we are on week's close now. But what do we see when we closed? On the daily chart, right? We've seen price take this range low here. It took this low of this candle, of the previous day candle. What day was this? Thursday. So it took Thursday's low and then swept it and then came back inside of the range. And now it's trading closer towards the high of this candle, of this bearish candle, right? So it took the open, not this open up here, I'm sorry. So it took the open and it swept the low and the close and traded back up above the open, right? So yeah, that's a pretty strong indication that we might be looking for a bullish move. We also have what I told you guys in one of my other videos is swing points, right? Which is the 3 candle pattern where price turns at 1, 2, 3, and then price begins to turn to the other direction. Or 1, 2, 3, price begins to turn to the direction, right? Sometimes you'll get funky ones like this. 1, 2, 3, which is technically a swing point, but I don't fuck with those. I like obvious swing points. 1, 2, 3, swing point. 1, 2, 3, it's a swing point, right? So all swing points aren't equal. Some will create big moves. Some will just be moves that create liquidity for the big move. But yeah, so pretty much what I'm saying is I like to see price get ready to create a swing point. It took this big ass area of liquidity, hella liquidity down here. Like I said, we've seen this on the weekly. I mean, you probably could even see it on the monthly. So it's one or two things that's gonna happen. It's gonna go higher or it's gonna go lower because this is a lot of liquidity. So we like to look at things in terms of liquidity, right? Where is liquidity resting? Where is the big, huge amounts of liquidity at? And those are usually below, weekly, daily, monthly highs and lows. So now that we have that understood, and now that we know that this might be creating a swing point, we will be wanting to look for price to probably open or trade somewhere in the middle of this and then go higher. So from there, drop down to our lower time frames. Like I said, I trade the 1 hour and the 5 minute. So that's what I'll be looking for. So if we take our charts, we get ready for Monday. Granted, if you guys remember in another video, Mondays are usually consolidation days. So you can see Mondays, sometimes it's not always like that, but something like this Monday, it made a nice run down, right? Not even, if you zoom in, that week made a nice run down. But this Monday here, from like here to here, I mean, it did a little move and then it consolidated. But Mondays usually consolidate. Here, Monday consolidates from Sunday, like consolidates. Mondays consolidate, right? I'm just randomly going to different places. Some Mondays, like I said, you'll get a run. Some Mondays you'll get a run. It does happen. Everything you hear that I say, take with a grain of salt. These are things that typically happen, most likely to happen, but it doesn't have to be that way. So I'm like, oh, bro, you lied to me. Like, nah, nah. So yeah, like I said, Monday can consolidate or Monday can make a move depending on where price wants to go. So now that price has just taken this low, I would expect Monday to consolidate, because when you see consolidation, it typically gives us the implication that markets are getting ready to make a move. Markets are thinking. The markets want to generate the liquidity that it needs to go to that other direction. So it took this liquidity here, and then I believe it'll begin to consolidate a little bit. And then Tuesday we might see a sweep of that consolidation, and then we'll make it run out. So that's what I think will happen. So what I would like to happen, what I like to see if I want to get into a trade, and this can happen on Monday as well or Tuesday, whenever. But what I would like to see, if we mark out Monday and we drop down to the 5 minute, and we bring that out. Okay, so this is Monday. So what I like to see, and I only trade in sessions. I don't think I've talked to you guys about sessions yet. I only trade in 2 sessions, the London session and the New York session. The London session is 2 to 5 in the morning, and then the New York session is 7 to 11 in the morning. So I'll just mark those out really fast. These are called kill zones, right? These are coined by ICT. These are not my concepts. These are ICT concepts. These are called the kill zones, right? You usually get 4 kill zones inside of a day. Like, these things are fractal. It gets deep. It gets real deep. Like, this shit get real deep. And then you can find, like, this is the London and the New York kill zone. Then you got the afternoon sessions, and then what you'll see is four sessions in a quarter. And if you drop down into those sessions, you can also find another 4 additional sessions in the quarter. Like, if you see how these two line up, you can fit 2 more in there. I won't go deep into that because it gets confusing. It can get confusing, but once you start to understand that, that's when shit really gets deep with trading. That's when you'll really start unlocking some sauce that you didn't even know existed. Because when I say shit's fractal, I mean this shit is, it's literally fractal, from the way that you see it to the way that it's actually being made. All right, so that's a whole nother topic. But like I said, what I like to see is, on the hourly, we want to see obviously a sweep, right? We want to see price made the sweep, right? So on the hourly, once we get over here, I like to see maybe this come down here and get swept, and then once this gets swept, I like to see price trade above whatever made it go down, and that is called a change in state of delivery. So that way, once I see that on the hourly, that gives me confidence and more confluence that price will go up. So once I get that, I get price go down, take some type of low, because like I said, I like, damn, I just caught my fucking words up bad as a bitch. But that's my rules for trading. And then if you look at 50%, where the hell is my shit? That can't be the right thing. I'm using that. Yeah, it's not. I'm like, what the fuck is that? I feel it. There we go. Yeah, so from here to here, you have 50%. Like I told you guys, I like to see something come down here and take this. So there's a few things you could do. You can wait, or you can even just trade down, right? You can catch money going towards. And this is called the draw on liquidity. Where is price drawing to? Where is price reaching to? So this could be our draw on liquidity that we are aiming for. We could catch shorts if you want to catch shorts. Or if you're like me, I like to just wait on the overall move, right? Because I don't want it to come down, take this low, and then go higher, right? And I'm still thinking it's going to come down here because this is 50% too. So I rather for price just show me what it's doing and try to, instead of trying to guess what price is doing. So I like to see price kind of come down here, take this low at minimum. Now if it just takes this low, cool, then we hop it in. But if it comes down here and takes this low, even better. And then from there, like I said, I want to see. So for example, we know this is 50%. So I'll just mark this out real fast. We know this is 50% of the range. It's not how you spell 50. So we know this is 50% of the range. So where is it? So if you take this, say for instance, here's next week when price opens up. I say next week, it's Sunday. On Monday when price opens up, markets open now. It'll be open in a few minutes. So yeah, even it could trade down here on Sunday. But regardless, whenever price opens up, we can see price come down here. I try to draw it realistically. Come down here. That was not realistic at all. What the fuck was that? My fault, y'all. That was just too horrible even for me. Alright, so yeah, we just let price, make his way down. What I like to see is it come down here and take, like I said, this low. This is a fair value gap, like I told you guys before. 3 candle pattern, fair value gap. So I like to see it trade into this fair value gap and then start to make its way higher. And I don't know how I can illustrate it here, but what this is, it's an order block like in the last video. So you get these up moves and then a strong down move. So this is the change in state of delivery, as I mentioned, right? So imagine, I hope this doesn't confuse anybody. So imagine this is a any type of candle that was trading up, but then you had a strong reaction down, right? So like here, these candles were trading up, and then you had that strong reaction down. So this is where I drew that line at, right? So you had that move up and then strong reaction down. So when price starts to get above the level that made that strong move down, that is a change in state of delivery, and that's very important to notice, especially on the hourly. So once we see that and we have that, what do? Well, we know that this is an order block. It just confirmed it, that this level holds up. So we want to set our buy orders at those levels like there, right? Set our levels there. Now you can be a conservative trader and have your stop loss out here, or you can be here, because if you catch it at these times, especially with a strong fair value gap, you probably won't have much market structure to have behind it, right? This will usually just be a few up candles. You won't have any like swing candles to put this behind, depending on how strong the order block is made. Sometimes you will, sometimes you won't. But I typically like to have it around below 50% level, because I want to see if price does come down here, I want to see it to stay, above the 50%. So that's why I drew this to here, because this is the fair value gap, and then this would be the fair value gap. So this is the example I showed you guys. This is an order block, down move. This is another one, down move. The burst out. So this is a fair value gap. I want to see price hold 50% of this level. So if this is the level, I want to see price hold 50% of this level, right? Same thing here. Order block, the up move, and then a strong down move reaction. Price comes up, takes this, and I want to see about 50%. Now, it might even come lower. It might say come down here, and that's fine. It's drawdown. It's cool if we have a drawdown, but the rule is about 50%, right? And again, when this came and took this low, right, it's still in the 50% range if you pay attention to it. This was below 50%, and then this is below 50%, meaning price is getting a discount. And if you get a sweep here, like a low here to get in, even better. Price bounce, takes off, and we usually go for 1 to 2 at minimum, and that's that. So that's kind of what I'm looking for. Price does what it does. It'll do what it do. And we just are spectators, and we don't tell the market what to do. We just react to what the market does. So always remember that and keep that in mind. And with that being said, I have some stuff I got to study for, so I got to dip. But this was fun. Again, sorry I started a little late, but nobody in here anyway, so all good. But cool. I hope this helps, and then I'll catch you guys on the next one. Peace out.